Good night.
Good night.
Everyone's here. Let's see who all is not here. I started to mark your papers, but I'm almost there. I'll have everybody paper on Wednesday along with your assignment result. And then I will give you all your mid-mark, your mark now as to where you stand on Wednesday when I send you back your papers. Because they were all scanned to me, I had to go and pick them up to mark them because I couldn't convert them to Word documents. So I had to go pick them up on Friday to have them. Yeah. So I'll have all your papers for you all on Wednesday. The assignment, well, the assignment, everybody did well in the assignment. Yeah. So, but the midterm exam, I marked some of them, and then we still had 2 persons who had to take it on Saturday. So I'll have everybody results for them on Wednesday. I will send an email to each of you individually because I have to go and scan them. After I've marked them, I have to scan them back to me and then scan them to you all. Yeah. Alrighty. Everybody read and come bright eye and ready to discuss. How far did we get in chapter 6? We were almost finished. Did y'all complete it?
No, ma'am.
Yeah, no, ma'am. Hello, we all had to do so. Huh? Mr. Pickstock, what you had to do so? Y'all finish my.
I'm still working. I'm still working late. I'm still working.
Pardon me? Well, you still the what?
Yes, ma'am. I haven't had no time to read. I've been working late all week.
Oh, I'm so sorry. They have you working so hard. Miss Roll, you didn't read either. Miss Strawn, Miss Roberts, Miss Augustine. None of y'all read. I know Miss Wallace tell me she won't be able. She's here, but I won't be able to call on her to read tonight. So I hope all of y'all able to just go through, because like I say, most of the stuff that we talked about foreign exchange and all of that. Yeah. I think we stopped where we started to talk about becoming financially independent. We didn't touch that topic. So we have to finish chapter 6 tonight, please. And I wanted to start on chapter 7, but let's see, because you know the countdown is on, because you know finals is next month. So, and I'm contemplating after going through finishing off the midterm exam, whether I'm going to just give you from chapter 6 to chapter 11, or I'm going to give you from chapter 1 to 11. So I will let y'all know when we come back to class, or chapter 10. I will let y'all know when we come back to class, but also remember in the back of the book, you have a discussion on responding to COVID-19, an open letter, retail and commercial banking. It talks about the new norm, what to do now, what to do next. So questions can come from this too, because it's talking about, and then I can probably just throw in some questions really asking you what's going on in the banking system, going on around the world when it comes to COVID restrictions and how it's being handled now. Okay, so who all had a chance to actually look at finishing chapter 6, because we started it. Who had a chance to finish chapter 6? Hello? Hello, can I get a vowel? Miss Sutherland, did you have a chance to look at chapter 6, finish chapter 6? Hello?
Sorry, not fully.
Anybody had a chance to, because nobody's saying anything. Anybody had a chance to review chapter 6? No class tonight? I can sign off. No class? Hello?
Good night.
Miss.
I didn't finish it entirely, but I noticed some of the material is a bit familiar from when I was in the branch.
Miss Roberts?
Good evening. No, I didn't get a chance to look at it.
All right, now, how much time we can have this discussion with y'all reading, man? What? I mean, y'all, let's just make the class so boring, because if we don't read, we can't have a discussion. So all y'all doing is come into class for us to go over what we should have already done. Yeah, y'all didn't see me for almost 2 weeks now. Y'all didn't see me for a whole week. Y'all had your exam last week, Monday, and that was it. Y'all was free.
Were you after school?
Hello?
Were you after school?
If I was at the school?
Yes, ma'am.
Not me. I don't ever. Even when we used to teach face to face, I never come to an exam. You know why? Because everybody's be asking me all the questions, so I never come. Even when we was actually face to face, somebody always invigilate the exam. I didn't. I never did. Yeah. But I had to go there on Friday to pick up the papers because she scanned them to me. And scanning them, I can't mark them like when y'all send them in Word. I'm able to mark them on the system and just send them back to you. But she scanned them to me, so I had to. And for me to get them printed, I would have to pay for it. So I just bite the bullet and went to Biff's and collected the papers. Yeah, so I just got them. Yeah, because she scanned them and I was trying to put it, export it, but it wasn't working. It came out so it didn't work. So I had to go and pick up the papers from Biff's on Friday. Yeah. And so I started to mark them. And like I say, I will have everybody's paper along with their assignment. I finished their assignment. And then, like I say, I have to go back and pick up 2 more papers because I probably will just go there and mark them there and then scan everything back to me one time and then scan them to you. Yeah, but I have to go. And that's why I didn't understand why y'all had to, I didn't know why face-to-face had to be a reason. I guess she said now midterm exams and final exams are face-to-face. So I don't know why. Yeah. Okay. So how was the exam?
That's pretty good. I go by pass. 1, 2, 3, 4, 5.
What you mean pray to God that you pass? You had a review sheet.
It was good.
It was
Mr.
okay.
Dixon?
It was okay though. It was okay. It wasn't too bad. But hoping to God I passed.
Well, like I say, according to what the results look like, we'll see if I give you from chapter 1 to chapter 11, 12, or I give you from chapter 6 to chapter 12. All right.
But
According to what y'all do.
I have confidence that it's okay. I have confidence that it's okay. But I was hoping to God it's feasible.
Yeah, I sure y'all did well. Y'all had a review sheet, so can't see why.
1, 2, 3, 4, 5, 6, 7.
Yeah. All right. What's this next class? Chapter 7. Please, I say this to everybody. Please do not come to my class next week not prepared, that nobody really read, talking about competition in the retail banking. As we all know, there's competition around the world in retail and commercial banking. So I pray you all get the opportunity as of from tonight. Please go and look at chapter 7 because I'm going to try to see if we could go over part of chapter 7 tonight. Because like I say, classes finish on the 18th of April. On the 18th of April is when your exam will be. It will be not be the last class. It will be your exam class. It will be your exam. So we have to finish these chapters to be able for you all to be able to write your final exam. And like I say, according to what the midterm look like, I will choose what I'm going to give you from chapter 1 to chapter 12, or I'm going to give you from chapter 6 to chapter 12. Okay? But it's according to what the exam looks like, the results look like from the midterm. Okay, so now we talk about chapter 6, individual becoming financially independent. As we know, becoming financially independent in anything, we have to have a good savings. And if we choose not to stay on a job, we also have to have a good savings. So becoming financially independent means that we have to save. And like I say, some people save from, they started to work from they was like in junior school. Before then, their parents were saving for them, and so some parents, they open accounts to children from very young, so children are able to go into the bank. Some banks allow children to actually open their own account along with their parents and save. So I know when I worked at one particular bank, there was this customer, he had a daughter and he had her come in the bank at all times to deposit her money. He would stand in the corner, make her fill out a deposit slip, and she would stand on the line and deposit her own money. And that is a good way for us to start when it comes to trying to teach our children to be responsible, because I think a lot of times parents do not invest that much into children. And because they don't, that's why we're in the dilemma we're in our country today, where we think it's okay to just borrow, because we have parents who feel, well, okay, if you want something, just borrow. I'm not saying borrowing money isn't good sometimes, but I'm also going to say you can save and you can borrow. You can also, like I say, we talked about it before, putting money on a fixed deposit, and that same money, which is yours, you can use it and borrow. I think the bank lend 95% of what you have, and just borrow against that money that you have. It's still teaching you responsibility of saving, and it's also teaching you the responsibility of paying your loan. So getting credit. So I say you can save and use the same money you save to purchase a car, purchase a piece of property, but you can put that money on a fix and borrow from the bank, getting their interest on your term deposit and paying them a little interest on their loan. So like I say, it says we should save 50% of everything you buy and grocery. Grocery, we know as today, when you go in the food store, the prices are really, really up. You cannot buy. I went to one food store and 3 pieces of chicken breast cost me $7. I don't know if any one of you have been shopping recently, but what do you think about the price hike in the supermarket and lumber company, most places today, and now with the hike with gas prices? Can I get your feedback? How do you feel about it?
I feel as if it's a bit much. Um, we need to do a different approach because that's a lot of money to pay on. Like, I go on the food store and I almost had a heart attack when she told me the bill. Because I was like, sister,
What?
You
this
too,
can't,
Joelle?
this can't be my grocery. That's a grocery I just buy because I come here every time. Buy the same thing. You know what it
And
Uh-huh.
is?
of the special that they have, put the stuff in the cupboard and the cupboard still ain't full.
I swear. Like I want to get
Well,
it.
I guess you're gonna have to try like what I do. I go to all the specials. I look at Solomon's, okay, what
That's
they
what we
have.
did, Miss Smith.
Mm-hmm.
And the
Did y'all
cupboard
have
still
it?
empty.
Okay, so when you say what about purchasing fruits and stuff? How is that?
I can't
Oh,
purchase it.
discount distributors have some
Listen,
nice specials.
Definitely not that.
purchasing fruits is expensive
No man, go to discount
because
thing
purchasing
on
fruits is expensive.
on Gladstone Road,
Or Jerome
Because
and Chesapeake.
right? You could get, and now remember now, Super Value had strawberries for $3.99. They had blueberries for $2.99.
Yeah.
And so what I did, I
Oranges was
usually
like
go
$5
right.
to $2.
I usually go to discount on Gladstone Road, but I realized they give me two strawberries for $10. I go on to Super Value and get strawberries $3.99. So
I can't balance.
I
I can't balance.
I
but
Discount
I
have a special too for $31 and you get a variety of fruit.
really,
who's that? Yeah,
Discount
yeah, they do.
distributors, yeah.
Yeah, they do. Yeah, they do.
but for me, I just feel like the average person that's making minimum wage, it's gonna be hard for them to, I guess, figure out, okay, do I buy apples? Do I buy oranges? For the average person.
But guess what? For the
Discount
average
special
person,
with
You
discount distributor special, like I said, it's $31 and you have blueberries, raspberries, blackberries, apple, orange. It's a variety.
okay?
Mhm.
And then if it's only you one, it could probably last you about 2 weeks or
and
so.
then they have spinach 2 for $6.
No,
They
but
have
I mean like with grocery on the whole.
Child, you have to check the specials every week
Yeah,
and see
with
what
like
you really need.
the average person. Listen, $200 can't do it no more.
No, no.
$200 cannot do it no more.
So what are we gonna do? In this changing time, what are we gonna do?
Cause I have a 10-month-old, and the last time I purchased milk for her was in November of last year, because I purchased them by the case in bulk. And her case of milk is now $20 more than it was last year.
Eh,
A can of milk is like $20, eh?
Well, she's on lactation, so a can of milk was about $14, but I usually buy it by the case. I don't buy them retail.
Oh, okay.
So when I went by Library and Trade, and they were like $140 a case, now they're like $160 a case.
I remember when can of milk was $5.
Pampers is like $50 a case, almost $60 now.
Wow.
Where do you go?
Everything
Where
is
do you
going up.
go? Where do you go to purchase Pampers?
Well, like I say, I do it in bulks. So when I buy like 3 cases. I go to Lowe's.
Yeah, this I was about to say
Yeah.
they have good specials there.
Yeah, I go to Lowe's. But she's phasing out of milk now, so I don't have to worry about that. It's just them putting VAT on these baby products and medicine and stuff like that, that hurting people.
It is, and like I say, but even though we say going to the food store is very expensive, you take a look around and you find that the person who does not have the means, you go by Wendy's or you go by a Burger King or you go by a McDonald's. How much times do you see a parent, a mother in there with 3 little children and she buying them Happy Meal? Hello. She could take that same money that she buy Happy Meal and buy some rice and some chicken breast or some chicken drumstick or and cook a meal. But as I say, a lot of times we still, as persons who really don't have it, still have their priorities in the wrong place. Because why spend $5 or $6 just for a Happy Meal to get a little toy in it? And when you could actually take that same money and buy some chicken, buy some fries, and you could do the same thing for them, you know, even if so you want them to have a Happy Meal every 2 weeks, you could go in and buy some little toys that you could put in there for that. But we do not be proactive. All we do, we take the easy way out, and you'll find that the persons who really can't afford it are the ones who go into Wendy's and McDonald's and buying a Happy Meal. You pass by Wendy's or McDonald's or Burger King anytime in the day, or don't pass on the weekend or government payday, because what happens? Everybody is lined up to go to Wendy's. And when we could purchase this same pancake
That's
at
the
home and make it,
elementary.
and well, they love an elementary too at home, you know, but we don't do that. We hardly
Honestly,
can afford.
I'm a
Mhm.
slave all in this place. I need it in 2 weeks because crush it on.
honestly, when I fry pancake at home, it tastes the same as Wendy's for me.
Thank you.
I mean, I just say
I agree. And
it
that's why I
tastes the
say.
same.
So that's why I say it's easy to just do your stuff, and then you don't have to complain about it and say, boy, they didn't give me enough of this, where the syrup. But you know, you purchase these things that you know that you like or your children like as a treat, and you do it at home. Ice cream, my granddaughter, she likes that. And so I would go in Super Value, you know, the little ones, they have like probably 12 in the little pack. I purchased that. I purchased the ice cream cone, and I take it out the little pot and I put it on there for her. And that's what I do. I need they what they call with this buy with Wendy's or Burger King and them stuff. No, I do it myself. And she quite fine because they have it mixed with strawberry or chocolate. So that's what I give her. The same thing I could purchase from Burger King. So I give that to her. If she want an apple pie, when I was away, I brought back a couple apple pies that I paid $1 for them from the shop, and tastes better than the ones in Burger King and Wendy's. So all I say, we have to learn how to change the way we spend. How many persons, like the central bank always talk about savings? How many persons can say they have $500 in their savings account? How many? So we cannot save, and they always say we should save enough that for 6 months. How many people can do that? Be honest. How many people can save with the changing times, with the price inflation? How many people can actually say, I can save 6 months salary if something happened? Or I have 6 months salary saved if something happened. How many persons can say that?
I don't feel like a lot of people can save that, but I do feel like a lot of people can budget better.
Agreed.
I feel like if you have a write down your expenses and you have a budget and you stick by that budget, if you go to the grocery store, I don't feel like you need to be on Wendy's or KFC line every day. Once a week is okay, but like for me, I carry lunch 4 days a week, and on Friday is a day where I buy lunch, and I just have a limit. I just feel like if people budget, everything will work smoothly.
Agreed. Because like I say, for me, I don't eat meat anymore. So I'm plant-based. So when I go to a Super Value Cable Beach, I know if I want to buy my plant-based stuff, I know it's gonna cost me, because plant-based is I bought I spent $52 yesterday in the food store on my plant-based stuff. So I get the plant-based fish fillet, I get the plant-based beef patty, which I have breakfast patty, which I have for breakfast. I get the plant-based beef, which I can do as a meatloaf, as a loaf. And then I get the plant-based meatballs, which I can do with my spaghetti. And so I don't need, and that's going to last me for a good 3 weeks, you know? So that's what, and eating, that's why I say eating healthy is very expensive. And so they wonder why we all so fat and we all have these cholesterol and all that, because trying to eat healthy is very expensive. Because when I look at that, I feel like, my God, these things are expensive. But I try to change the way I eat. So I eat plant-based. I don't eat meat. I eat plant-based stuff. And I eat a lot of fruits and a lot of vegetables. So that's what I do. And so it's very expensive. But like I say, you know, the things that we can afford, like the corned beef, with the corned beef and rice and corn on the side, you know, that tastes so good, but is it good for us? But that's sometimes that's all people can afford, you know? And so that's why I say eating healthy is very expensive. Buying fruits, buying vegetables. Even when you go to the farmer's market and you expect to get a deal, some people, they have 4 bananas for $4. I'm like, miss, $1 for a banana, you know? So you go into the farmer's market because these are the local stuff that they grow. So you go in there in hopes that, you know, you spend less, but it's the same thing. And there's the stuff that they grow in their yard or go on their farm. So it is what it is. What's the gas price now?
Some 5.40, 50 something a gallon for Rubus.
Who's the cheapest? I put Shell. I hope Shell ain't so all of that.
No, Shell is 5.37.
Oh Lord, you better fill up your car. Lord, I know what's gonna happen. That's why these people now who have, anybody have electric car? Anyone of y'all have an electric car?
Nah, Miss Smith, you know nobody in this house have an electric car.
What you mean? But you will see all them electric car on the road?
Nah, I know.
Plenty of them on the road. Easy car.
Listen,
Dan-
the bank may own them for that.
Yeah, but they mind. Any guys the bank own their mind, but they driving. They ain't gotta worry like us trying to figure out all this gas prices. They just go straight to the sports center where the Chinese put all those what they call them, solar thing up on the roof, and they just solar panels. They just go charge their car. They even ain't gotta pay for charging. Just go to the sports center and charge their car. Yeah. So they ain't gotta pay for nothing. No electricity. Just go to the sports center, wait there for a while, charge your car. Yeah, so that's gonna become the norm soon. Mona, how are you? You still on the road, eh? Anyhow, well, like I say, it's only gonna get worse. It's not gonna get better. It's gonna get worse because prices just keep going up, and every time you go to the food store, it's a new price. I'm like, what is this? Last week, when you go to the food store, what is the price of a head of lettuce, the iceberg lettuce now? What's the price of one of those?
If it's more than 5, I ain't picking it up. I don't know.
You mean, and don't talk about the other lettuce, how much that costs. And don't talk about the broccoli, how much is that? You know, so that's why I say sweet pepper, all of those things, very expensive. And so that's why I say, yes, we need to save for 6 months. So to ensure that we need to have at least 6 months salary, but save, but how do we do this when the cost of living keep escalating and our salary is not increasing like that? Do you think we get cost of living increase in our salaries?
No,
Nope.
But don't they say we get cost of living increase?
no, ma'am.
I'm not sure. Let me see.
I watched something that was on Eyewitness News the other day. That this somebody in the university, she did this study of the cost of living in Nassau and the cost of living in Freeport, and she estimated that the cost of living for a family of 4 in the Bahamas, I think she said, well, $10 per person. That's for the whole day. And the cost of living for somebody that lives in Freeport will be $15 per person. That's for the whole day.
Whoa, that's kind of hard. And imagine somebody who, because like I say, we weren't taught, a lot of us weren't taught how to save. And like I always say, people think savings is, oh, I'm able to put $500 one time, 500 again. A savings is where you're consistent. Whether you can say, okay, I can save $50 every 2 weeks. I can save $100 a month, but you're consistent. But you can put up $500 and then 2 weeks later, you want to take out 4. So it's being able to save consistently shows your savings practice, consistent savings. Even if you put $50 a month, at least you know you saved that $50, and at the end of the year, you have $600. But a lot of people just think savings is putting up big lump sums. Savings is being consistent, being able to say, hey, I joined this Christmas club where I put $40 a month, and at the end of the year, I get this amount back. But a lot of people, like I say, think savings is being able to put $500 and go back and take 4. No, that's not saving, you know. So that's the reason why we should have a budget. We should have our money budget out where we say, okay, I will save this just for a me lunch or a me Saturday outing. Then this is for the expenses, and then this is just a savings, my emergency savings. So if something happened, I'm saving this for that. But we don't do that because, like I say, our parents never taught us that. All our parents taught us was spend, 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 not save, save, save. And a lot of parents do that. Yeah. Well, in my era growing up, that is what I know. I had to learn how to do it on my own. But growing up, it was like, let's just borrow. Let's just borrow. Yeah. And that's the era that I grew up in. And now that's the era now with the y'all younger folks. Most people think it's just let's go and borrow. Let's just go and borrow. Mr. Marshall. Hello.
Yes, ma'am.
Hi. Where you work now?
I work at the Bahamas Mortgage Corporation.
What do you do there? Because I needed to ask a question.
I'm a senior clerk in the registry.
Oh, so who else worked at Mortgage Corp? Miss Strawn? No? Miss Roberts?
Yes, ma'am. Yes,
What do you
ma'am.
do there?
Collections.
I'm in credit.
Miss Strawn, you work there also?
Yes, ma'am. I'm in
I need to
collections.
ask a question. Are y'all giving loans now? Mortgage loans?
We are.
The maximum somebody can come and borrow, say if they see a house that is repossessed and they win a bid, what is the maximum they can borrow?
Well, the maximum, firstly, whatever they can qualify for is the max that they can borrow.
No,
once a
but I mean,
year.
what, because I know y'all have a ceiling, 230
Right.
something or, okay.
It's 237,500.
Uh-huh.
But anything else over that would have to be approved by a board, because
Okay.
that would be considered more so of a risk. Because 237,500 would be
It's the
government guaranteed.
max.
Yes.
Yeah, government guaranteed. Okay. Another question. What is the actual requirement down payment for a person if they saw, like I said, a repossessed house? What is the requirement down payment, which include closing costs? What would they have to come up with?
Well, the
How much
difference
percentage? The percentage.
the difference between us and other commercial banks is that our required deposit is lower. It's 5%, but we take in consideration what you pay the vendor down. So sometimes the max, is 5%. But if it's over advanced, which means that if you insist on purchasing a home, but it's over the appraised amount, then you would have to come out of pocket with more money to accommodate that. But we can only lend up to 95% of what its value.
Well, why would somebody purchase a house and the appraisal says it's worth less? Why would somebody do that?
Some persons, a lot of times when people come to the bank, they don't really understand borrowing. And so because they see a house, they don't care what it is, because they so hard up to get the house, they would by any means still want it. You could give them all of their options, but if they really want that, they would go ahead and put the extra money because it's something that they would want to do. It's silly, but some people just don't care.
It is because even when you do the appraisal and you want to take out an insurance, they look at the appraisal too on the house and the market value, what it's going for on the market. So and an appraiser is the one, he's licensed. So he's telling you in this area, say a Carmichael or say a South Beach, this is what the houses go for in this area. And you're going to say, oh, okay, but somebody want to charge you a price for a house out east or out west, and you're willing to put the difference? Well, I never knew people did that. I didn't even know the bank would actually even accept that if it's out of the range of what the appraiser says. Because I know even when
even if, like I said, with the 95%, we can only lend up to the 95%. So if they insist on it, they would have to bring the difference.
Okay. But you'll only be at risk for the 95%.
Yes.
Okay. All right. I may have to reach out to you. I'll reach out to you. Okay. Yeah. And so now we're talking about buying a home. The bank would lend you money to buy a home unless you won't lend you money to buy a home unless you have a down payment. What is the most, say if a person, just a ballpark figure, say a person wants to borrow like, say 150,000. Is that 5% inclusive of their closing costs, Ms. Roberts?
Sorry, can you repeat that for me?
Okay, their closing costs, because I know most banks these days, a lot of young people cannot afford a home because they would say, the bank says to them, okay, you have to come up with this amount, you have to come up with $30,000 to purchase, if you want to purchase this home, which includes your closing costs, your down payment. Is your figure big like that too? Like 30 grand?
No, not at all. Like I say, it all depends on what it is they're getting. The only time they really have to come in with lots of monies is if they're over advancing the loan, which means they'd be going over the appraised amount. And let's just say that would include us consolidating some hefty loans. But regularly 5%, once you pay a deposit to the vendor, sometimes we incorporate that in the 5%, so you'll only be paying the difference. So a lot of times people only bring in like $5,000-$6,000 for a deposit.
Whoa, that is good. See, and I think Mortgage Corp need to do more marketing and advertising, because we have so many people, young people out there today who wants a house, who wants to get a home. But guess what? When you go to First Caribbean, Scotiabank, Fidelity, a Finco, these people telling you these outrageous amount that you have to closing costs is like, even though you may have pay the vendor a deposit that they asked for, and they still telling you have to find 20 or 30,000. That's why a lot of people can't get a home. That's still a lot. That's a lot of money. And so buying a home, like it's a lot of people can't afford it because you have to put a down payment, and a lot of people don't have that. So I think Mortgage Corp need to do more little advertising so people know that, hey, boy, government guarantee. Because I know a lot of when I worked at Ministry of Housing, that was one of the things that they did, government guarantee loans. So it made the down payment less than or mortgage indemnity insurance to do. Y'all do that too? Mortgage indemnity.
I think so. I'll have to double check.
Yeah,
I don't want to.
I think that runs with that, and that's why mortgage indemnity is taken out, something separate, because of the government guaranteeing the loan. Okay, but that's still good. Y'all just require the 5%, and once a person has had some investment with the vendor, it makes it lower. So that's good. But I just say that they all need to advertise more so people don't be scared because of these big figures the actual commercial banks and other lending institution is telling them. Even BOB, it's like you have to come up with so much money. Yeah. Okay. You are not allowed to borrow a down payment. Yeah, you're not allowed to borrow a down payment. But I remember when I worked in the bank, I remember people used to go to one company and they borrowed a down payment. They come to the bank and they got the loan, but they have to pay the person they bought a down payment, plus they have to pay the loan. And a lot of times they don't tell you they bought a down payment from someone and they come to get the loan. So they in all kind of trouble. So that's how come you find a lot of people get delinquent, because you can imagine you went to a company and you borrowed $20,000-$30,000 for a down payment and closing costs. Then you're getting this mortgage for say $150,000. So you're investing all of that. So you have to pay the bank, plus you have to pay the person you borrowed, the other private lender that you borrowed the closing costs and the down payment from. So that's how a lot of people end up losing their homes. Like I say, in the climate that we're in today, a lot of persons are losing their homes. You have where you have one person working, the other isn't, and so a lot of persons are losing their homes. Your down payment needs to be at least 5% of the purchase price of the house. And then the bank will consider lending you, like you say, Ms. Roberts, 95%. There are all sorts of other costs and fees that you need to pay when you buy a home. So you will need an additional 5% just for those costs. Savings is what will open the door to owning a home. And that's what a lot of people don't understand. That's why I always say, with persons getting consumer loans, like government persons getting all these different consumer loans until they run themselves up to like $80,000. When they reach the $80,000, how is it that you can qualify to get a home? Miss Natasha, how can you qualify to get a home if you have a consumer loan for $80,000?
You probably gonna find some family member that's willing to put their name with you, to co-sign with you for you to approve.
But also remember too now, I don't know, like I know before when I worked in the bank earlier, they used to have where two sisters could sign and get a loan. But then the bank had a lot of issues because one sister decided, I'm going to get married and leave the other sister. So what happens? Here comes delinquency. Then we have boyfriend and girlfriend, they get a mortgage. Here comes, we break up. So what happens? Here come delinquency again. We have a family member, and I don't think the bank now do that where they allow family members to, may be mistaken, but I know they were trying to phase that out, and it was a hard sell when you try to get a home with your, some banks with your family member, because like I say, sisters, we together, but then I get married, I leave you. You won't have to pay the mortgage because I need to take on my own responsibility in my marriage and get a home with me and my husband. And so you find that that's a hard sell sometimes with the banks. Yeah. And then even so, you have where in this climate now where we have a lot of divorce, we find that a lot of banks are losing because people get a divorce or somebody moved out and the other person wasn't paying the mortgage. The other person who moved out was paying the mortgage. And so they just choose to say, I'm not doing it anymore because you live in the house, so you need to pay it. But the person living in the house can't afford to do it. So here comes another delinquency again, house for sale. And that's why it's imperative that we try to save. And like I say, savings is not just being able to save $500 a month and go back in 2 months and take 800 off it. Savings is being consistent. A lot of times, like for me now, savings for retirement. Well, as we know, most jobs now, most, not every job, like I say, I had a rude awakening to learn that some jobs don't have to have health insurance for you. They don't have to have a pension fund for you either. I never knew that. And I'm like, whoa, so why am I going to work at a job where I don't have a health insurance, nor do I have a pension fund? No, I'm not going to work at that job. I don't care what, I won't work there. You know, because like I say, you work for 12 years and what did you achieve, what you get from it if you didn't choose to actually have your own pension fund? And as we know, trying to do that is very hard. So I think that's kind of rough. You can tell me, oh, we don't have a pension fund. Oh, we don't have medical insurance. No. Anyone of you working a job like that? Where you have to take out your own medical and your own pension?
Yes, currently working on one right now. You ain't got no pension, no health benefits, nothing. So if you want to do something, you gotta go outside and do it on your own.
So are you doing it, Ms. Spexer?
I have an insurance. I have an insurance, but
With a pension?
I ain't no pension. I just went to one person in Kalina to try to work something out, a financial advisor particularly.
Mm-hmm.
But
Mm-hmm.
I'm planning on starting it. It sounds like a good idea to do it. But nonetheless, I can try it.
Yes, you need to, because guess what? At the end of the day, if you consider at least, you know, because with companies who have pension insurance, they would match what you put in. So up to 5%. So if you put in 5% and the company put in 5%, you have 10%. So I'm saying a lot of times it's good to see if you could do a 10% or a 7 or 8%, you know, in your savings or your pension of your salary. And, you know, it isn't that much, you know. So I would advise anybody to just try to do it. If you don't have a job where the company pays for your insurance, I would say you try to take out some pension insurance. I would say you also try to take out some health insurance, because like I say, when you leave them, you still have that health insurance. And when you took it out, you were younger. So for me, who was older, when I left Fidelity, I had to start over, and my payment is higher because I had group insurance with group medical with Fidelity, but they didn't have it where when you leave, you could just swing over and use that same insurance. So I think that's something a lot of insurance company should start doing when it comes to medical insurance, because what's the sense of me paying it for so long, and then at the end of the day, I still have to, when I leave or I retire, I still have to go and look for another medical insurance for myself. Yeah, so Mr. Fixlock, I would advise you, and anybody who don't have a job where you your medical, you have medical or pension, try to look out there because you're still so young, and try to take out medical and pension. Savings for retirement. Another important reason to save is your retirement. The sooner you start saving for retirement, the less you will have to save in the future. You can put your money to work for you. As you continue to contribute over the time, you will be earning more interest on the money, and then you can put in each month. You should at least be contributing up to your employer match, and eventually you will want to contribute 10 to 15% of your gross income. And that's what I was saying to you, Mr. Pickstall. It's good if you could put 10. If not, try to put 8 or 7. But, try to see. It's not going to be that much, but if you start now, you'd be amazed. And because you get interest and they invest in different bonds and securities, mutual funds. And like I said, because you're still young, you could invest in the high risk one where you get more returns. Like I say, when you're older or in the middle, you can invest in the medium risk. But when you're older, you need to just invest in the one that have no risk, because you need your money depreciate, and you need it to appreciate. So you don't need the mutual fund had a hit and so you lost $50. No, I need it where the mutual funds growing and I earned $50, not lost it because, of my age. But younger persons, y'all should invest in high risk bonds or mutual funds and stuff like that, so you get a higher return. We talk about getting out of debt, and the only way we can get out of debt, and like I always say, we have to plan. If we don't plan and look at and put a budget together, how will we get out of debt? Like I say, a lot of persons today, they go to the bank and they say, okay, I need a vacation, so I'm going to borrow some money to go on a vacation. Fine if that's what you choose. But I'm saying, how easy is it for you to just save for that vacation? You choose, you say, okay, now I want to go take my children, my family to Orlando for Christmas, or say for summer, Easter. Okay, this is what the tickets are going to cost. So you say from last year, now I wanted to do that this year. So you've been budgeting and saving from last year. So when it comes now for you to travel, you have that money saved. So you don't have to go to the bank to borrow for a vacation. How many of you believe it's okay to go to the bank to borrow for a vacation? Miss Roll? Hello? Miss Strawn?
What was
No,
the
I was asking, do you believe it's okay for you to go to the bank to borrow for a vacation loan?
I don't feel like it's necessary.
And that's why I say you can save. And once you try to save, you can, like I say, put a budget together, put a plan together. Okay, I have this credit card, I'm really tired of paying this 16% interest on this card. So you know what? I'm going to pay this, they gave me a limit of 5,000. You know what? I'm going to pay this down, and then I'm going to ask them to cut my limit to 2,000. And so that's how we start getting out of debt. We have these cards, so we say, okay, I'm going to pay this one off, pay that one off, and then whatever I credit on that card at the end of each month, I'm going to pay it off. And so we save on finance charges, we save on different fees. But a lot of times people, when they make the payment to the card, what they do, they go right back and they use the money that they paid to the card. So like I say, the best way of trying to get out of debt is looking at the smaller bills that you can pay off and pay them off. Budget, plan how you pay them off, the smaller ones. And then when you get to the mortgage part of it, you just say, you know what? Now that I've paid those smaller bills off, hey, I have an extra amount. Okay, my mortgage payment is $1,500. hey, I have an extra amount, like $300 that I really could float with. It's floating. I could use that and put that to my principal every month. And so right then you're beating your mortgage down payment, your mortgage loan down by putting money to your principal. And so I say that's the way you have to go about trying to get out of your debt. A lot of people don't do it, but like I say, that's the way you could try to get out of debt. If you ever want to get out of debt, you have to have some money saved. Some irony does not it. However, the credit cards are never going to pay off if you have to keep using them for every emergency that comes along. Even if you are an awesome planner, start show the half of us experience at least one totally unexpected expense each year, and half of those will be unexpected car trouble. Yes, because we know we have expenses that happen, and that's why I say having persons who don't have medical insurance is good to just take out. They have the silver, the bronze, the gold, the platinum. You take out the one that you can afford. Sometimes the deductible is higher, but you take out the ones that you can afford, and at least it'll help you when you have an emergency related to medical. Well, we know with car problems, it's car emergency issues. It's like sometimes we fall in one of the government potholes. So, and if you don't have pictures to show that you fall in that government pothole, and even if you find pictures to show that you fall in it and you go to try to claim, it'll take forever. So things like that happen. So unexpected expenses could happen with your car. You can get 4 or 5 tires one time, and you have to purchase new tires because it can't be repaired. So things like that could happen. But like I said, with the credit card, it says, so before you start aggressively paying off your credit card, you should save 500 to 1,000 as a reserve funds, that when unexpected things come up, you can pay them out of your reserve other than using that credit card. Maintaining a reserve funds will also help you to notice if your spending is getting out of hand. And like I said, we call it an emergency fund. So you put money aside for unexpected things that you don't expect to happen, but you have an emergency fund. So if something do happen, you're able to go into that emergency fund. Like we all know, we have annual expenses. Annual expenses, especially for persons who have homes. You have house insurance. You have real property tax. These are stuff that you will have to pay annually if you fall under that bracket when it comes to real property tax. I think they're trying to implement something now where everybody's going to be paying real property tax. But for persons in a certain bracket, well, real property tax is coming. This is what you have to pay. It's due at the 31st of March every year. They give it to you sometime in October. And so they're saying to you, oh, it needs to be paid by the 31st of March. Yeah, so we know that could come. Then you have like minor repairs, maintenance around the house. You have like we talk about car problems. And then, like I say, the credit card with high interest rates. And so annual expenses will come. Expenses, you have medical expenses if you don't have, because you have to do your medical, your annual physical. A lot of people don't do it, but it's imperative that you try to at least do your annual physical, because if you have some sort of ailment, at least it's be able to pick up early, and maybe you can, the doctors can have a cure or help you with it because you caught it early. But sometimes people don't go to the doctor annually. So when they go, oh, you have this or you have that, but because we don't do our regular checkup. And like I say, yes, medical is very expensive, but we have to try to actually ensure that we have a medical insurance. Unforeseen expenses. What will you do if your car needs some major repairs? Do you have a $500 or $3,000 on hand? What if your house needs some repairs, or you discovered that there's that you are living in a building that leaks, you can't always count on the bank to lend you money for all of these things. It is much better to anticipate a worst case scenario and have some money saved. Do you agree that you should have some money saved as an emergency fund? Mr. Marshall,
Yes, I agree.
do you ever had situations where you didn't have funds saved and or you had funds saved and it was good because you was able to use that emergency funds to pay for a car repair or something else?
Yes, ma'am. It comes in handy because, like you said, life is unexpected and you don't plan on it. But when it happens, either, for instance, like with a car, either you have the car lay up and wait until you find the funds, and that could hinder you from getting to work. That could cost you more money because you need to do other things. There's to get someone else gas money, all kind of different stuff. So it's better to have that cash or have that, I guess, even a credit option if need be. But I think it's wise to have emergency funds put aside.
Yeah. Emergencies, as much as we hope emergencies won't happen, we all know that they do. A family member can develop a health issue. You may need to make an emergency trip. You may have a car accident or a breakdown, some severe weather flooding, basement cracked pipes. So stuff like that can happen. Unexpected things like accident, leaks. And nowadays, I don't know, it seems as if a lot of people are experiencing termites. And so it's so much other little things that just happens that it's unexpected. So, savings, we have to save for emergencies. And like I say, not all of us can, but like I say, we try to put a certain amount aside. Yeah. Like I say, you can lose your job. Could you could lose your job or get hurt. And if you lose your job, like we know, and like I said before, COVID taught us a lesson that it's good to have more than one career because most persons, like I said before, work in hotels. What happened? Most persons got laid off. COVID came, hotels closed down, not much gas. So whatever, if you didn't have any emergency funds and you have a mortgage, you have car loan, you have children in private school, how many people had to how many couples had to take or parents had to take their children to private school? COVID cost a lot of, and COVID is like a disaster, a natural disaster, like the Hurricane Dorian, a natural disaster that really you didn't foresee and it happened. And so your life get turns upside down. And so you know, um, having little savings is good because you're able to at least go in the cookie jar and get something. You know, you get sick, you could get hurt, and what happens? So, all of these things you need to save because of unexpected emergencies can happen. You can get hurt, lost your job. People save to have a good life because after you retire, do you think you want to, when you reach a certain age, do you think you want to still have to go on somebody's job and you really don't want to, but because you reach a certain age and because you didn't save, so you're out there doing a little security job, which your life is threatened because you know you're older and you can't stand up to a gunman coming to the door and saying there's a hole up, so you'd see a lot of older men today on the road going to do security job because they didn't save. You find that a lot of government workers, like persons who are police officers, defense force officers, you see them going back into the force being reservists. What do you think? Do you think that's fair that a person who's already left, they should be allowed to come back into the public service or back into to the police force as a reservist when we have so much young people out there without a job? How do you feel about that, Mr. Pickstock? Miss Roberts.
Hello.
Hi. I was saying, how do you feel about persons who've already retired or spend their years on the police force or the defense force or any government job, and now the government put them on contract, or the government decide that, okay, I will take them on as reservists? Do you think that's fair when we have so many young people who don't have a job?
No, I don't. And I always express that. I feel like from you have to be on a job till you 60 to 65, you don't have a life. I personally will not be on, I don't, let me don't say will not, because you ain't passing it and tell you that, but I don't plan to be on a
Right.
job no more than 50. I mean, give younger people the opportunity to work and, invest their years in jobs where they could be pensionable as well. And I feel like a lot of older persons are usually on the job because they make bad decisions and they still have bills that they have to pay or loans they have to pay. And so they have to be on the job. And they just make it unfair for young people to come in and put in their years.
Agreed, because like I say, like you just said, they didn't budget, they made bad choices, they got a lot of loans, and that's why I say it's so unfair when I see persons, some police officer who retire and they bend over, you see them in the khaki, and but there's reservists. I said, what are you doing out there? He can't even run if the robber doing something. Why is he still on a go? Why is he still working? Why is he still there? You know? Have a good life. To have a good life, there are huge emotional, psychological, and physical consequences to always living stressfully from hand to mouth, paycheck to paycheck. People who don't plan for their future seem to run from crisis to crisis. And like we just say, because we don't plan, we end up in the mess that our country is in today, because a lot of people didn't plan. So we live paycheck to paycheck. And so we have to, we just have to, girl, I ain't got no money. I got to wait till payday. So we pray that things don't happen until payday comes around. There is a little known truth that happiness can come from being organized. Being organized is not going to make you happy or make you happy all by itself, but it can sure help. There's so much in your future that you can have control over. So putting aside some money to spend when you need it is actually organizing and taking control of your future and financial affairs. You have nothing to lose by savings and only a happier future to gain. And that's true. So if you save, you're able to do some stuff. You're able to say, okay, I retire now. I can just go on a vacation for 2 months. I can just, enjoy the finer things in life that I wanted to do and didn't do, because I was working. So I can go to the spa, I can get my hair done, I can travel, I can do so many things. But like they say, if you don't plan and you run from one crisis to the next crisis, what happens? You have nothing, you know? Start your emergency savings funds right away. And like I say, and I stress to you, y'all are still young, so start to save. Start to save by setting aside little money each paycheck until you have an emergency funds of $500 to $1,000. If you receive a bonus from work or an income tax refund, which we don't get, use that to get your start or to add to what you've already gotten set aside. As life happens and you need to dip into your funds, fill it back up. It takes a bit of work, but it's a habit worth getting into. Yes, and so once you start saving, you'll be fine. But they say bill it, start it, 500, have a 500 to 1,000. You have as your emergency funds. You have it set aside, and you're doing fine. So hey, if one little thing happen where your car need one battery, because the battery could be gone too, at least you could say, boy, I have that emergency fund. Hey, I could take this $100 and something and when I get paid next week or next month, I could put that back into my emergency funds. But we tend to keep taking and not putting back. Just like you have some people who will have their hands open to you, keep taking from you and never paying you back. And when it comes to you getting from them, their hand is actually closed. So like I say, it's good to start savings. So if you haven't, try to put a little aside every payday into an account that is not attached to your ATM card. So when you're feeling a little, you need, oh, I think I just need to get something. You can't go to that emergency funds because it's not tied to your ATM card. So when you're trying to save, never tie your ATM card to that account. Any questions, any concerns, any input from what we just talked about regarding savings? And why do we save? Mr. Ferguson, I see you just joined.
Yes, ma'am. Apologies.
Yeah. We were just talking about savings, and what is your input on savings? Why would you save? What do you think are some of the reasons for savings?
Insurance purposes for emergencies.
You work at Pingham to a Mortgage Corp?
Yes, ma'am, I do.
What do you do there?
I work in collections.
Pardon me?
I work in collections.
Oh yeah, you do. You work in collections. So you run the people down. Do y'all ever get any of them wholesale?
Yes, ma'am, we do.
What happened to the ones that the people that say they're moving out?
Don't worry, you saw and read about them in the news. I'm pretty sure of it.
Because I like I said, you have them ones who live through, like, you know, y'all have houses all around. So off Blue Road, off this place, and you say, okay, now y'all gonna sell the house. So how do y'all get those people out? Because they say they ain't moving. They representative give them the house. So how y'all get them out?
We are not, the Bahamas Mortgage Corporation doesn't put anybody at the house, like my good boss would say. That's for the courts to decide.
So do y'all get rights to it? Have y'all been getting rights to be to these houses? Like, you know, how the banks is having the paper and say, okay, now the bank got the claim to the house. Have y'all been getting?
In recent years, when I first came to the corporation, it was a stagnated process where we were putting in effort and getting the results. But the former administration and this administration looks like they've had enough of that party politics thing. So
Okay.
yeah, we are moving in the right direction when it comes to securing these properties.
Okay. All right. Okay. Okay, now we have the type of customers. Type of customers. When we talk about the type of customers, we know we have the different type of accounts. Type of customers, type of accounts. We have sole accounts, joint accounts, minors, sole traders, partnership, companies, trustees, and clubs and society. We know most commercial buying, savings and loan buying, they open these type of accounts, and sole accounts, personal account with one account holder. Others may be allowed to sign on the account. So there's the customer, the key feature, and then we have the account liability. And so we know with a sole ownership, a sole owner account, it's a sole owner. So if it's my account, I am liable on my own. Then we have the joint account, personal account, where two or more people share the account. Both account holders are liable because it's joint, you know, so both of them are liable. Minors account, personal accounts holders under 18. The account holders or guarantor depends on the circumstances. So most of the time accounts, you know, before they used to put in trust for, I don't know how they do it now, but you know, the person who is the parent will be the liable one. Sole trader, a business account. Others may be allowed to sign on the account. The sole trader, he or she is totally liable, just like the sole account holder. Partnership, we know with a partnership account, we have a business together. We share the profits, so we must share the liability. So we both share profits. When there's profit sharing, where we made more than we say, okay, we this is our forecast. We forecast we would make 500,000 in 2021. We made 700,000 in 2021 after paying all of our expenses and everything. So we came in with a profit of 200,000. So because we're partners, so that has to be shared equally between the two of us. If it was a lawsuit from a client and we share a partnership and the lawsuit is 50,000, we partners. Some partners say, well, okay, I have 50% or 51%, you have 49%, but we're partners, so we have to share. I guess they cut it down where you have to share that, you have to pay that 51, I pay the 49. But as partnership, we have to share the responsibility as well, the liability as well as where we share the profit. Companies, incorporated limited companies owned by shareholders, they have a separate legal identity to their owners and managers. So we know the liability is on the company and the company has shareholders. So that is where the liability lies. We have trustees, business or personal, where funds belonging to a third parties are held in trust for a beneficiary, the beneficial owner of the funds, unless the trustee act outside of their power. So the funds, who's the beneficiary, they are the ones who is liable unless there's some power of attorney or something where the trustee is acting on the beneficiary behalf. They have a power of attorney, then we know the trustee will have to be the one liable. Clubs and societies, unincorporated bodies run by a committee. Can you give me some examples of a club and a committee? Clubs and committee and societies, which around in the Bahamas, around the world, clubs and societies. Who falls under clubs and societies?
The Lodge.
The Lodge and who else? Pardon me?
Rotary, Kiwanis.
You have the Red Cross, you have Girl Sky, stuff like that. These people, they fall under that. So when they go to open an account, these are the forms they would get, clubs and societies, and so they would have to fill out those type of forms where they have committee members. So the committee members will be the ones being liable if anything happens. Sole accounts. This is a standard account. It is the responsibility of the name account holder. This is the simplest form of account to operate, as it relies normally on one signature or authority of the customer to draw checks, execute transfers of funds, and unauthorized stops. So we know with a sole account, it's just like me opening an account by myself. So I'm the only one who can go and withdraw from that account, give instructions to say transfer funds somewhere else or do a wire transfer. I'm the only person who's authorized to do that. When you have a joint account, as you know, a joint account can be either to sign, can be both, either to sign where, or you can have a joint account where you have both to sign. So as a joint account, if it's either to sign, I can go in by myself and get the funds, or the other person on the account can go in and get the funds by themselves. So you have to be very careful when you decide that I'm going to open a joint account, but either of us to sign, because you're giving me the right as well as I'm giving you the right to be able to go and withdraw money off that account without my signature. Just your signature alone is required. But when you have a joint account and you say both to sign, okay, Andrea Smith and John Doe both have to sign to withdraw money off this account. If both signatures are there, neither of them can get the funds. Then you have some persons make a stipulation on a joint account where they say, Andrea Smith can withdraw the money from the account by herself, but Joe Doe cannot withdraw money, funds from the account by himself. He has to have Andrea Smith's signature as well to be able to withdraw funds. So some people set it up that way and some people don't. And so it's how much you trust the other person. And even so in today's world and trusting people, we don't know, dire situations comes with things happen in crisis. We have crisis, so yes, Andrea is my sister, but boy, I need this $500, but I don't want to ask her because I don't think she can give it to me or allow me to get the money. So because Andrea decided that she trusts me and she have this account and either one of us assign, what do? I go in and I take the $500 and pray and hope that I able to put it back before Andrea find out. And if Andrea is the kind of person who snooped through the account, she'll figure out that 500 was gone and it went back in. So she's still gonna ask. So do you believe in having joint accounts with either the side, Mr. Ferguson?
In the cases of being married, yes, or maybe you might have a mother or a loved one that you're taking care of. A joint account would be smart.
Right, but in the joint account being smart, is it smart to have either to sign or both to sign, or one person could sign by themselves, but the next person have to sign up to signature?
Like I said,
Yeah.
it all depends on the individual. For one, you might have a relative that a mother per se that you want to put on a joint account because you're helping taking care of her. And in the event that she passes or something happens to her, all the monies on the account revert right back to you.
Yeah. And another thing why a lot of persons don't feel it necessary to have another person on the account with them, because they say, oh, if I die, it's in my will, but we don't take into consideration a will has to go through probate. You need, like you just said, you're taking care of your ill mother, and what happens then? It may be her money too. And if you need to take care of her, but if the account is in her name alone and something happened to her, what happens to the money? Because you have to go through probate to be able to get that money. Other than that, the government gets the money, or the bank just use it, and every year it charges, and then eventually, if enough funds is on it, it becomes dormant, and then it's gone to central bank. It's cheated and gone to central bank. So like I say, I would advise anybody who have accounts, you have children who are old enough, you have persons who you trust, like I say, who won't do you in by stealing from you, by taking money off the account. Make sure you do, because we all say probate, but if you need urgent funds and you have to wait for the courts, it could take a long time before the will is even probated. So it's good to have another person on the account with you. And like Mr. Ferguson said, marriage, yeah, I agree, yeah, marriage, but then in marriage, or like I said before, that person have to really be trustworthy, because like I said, I know of a situation where a couple, they were at war with each other, and they were leaving each other, and the wife reached to the bank first and she take all the money. So when the husband reached, the account was empty, and he was like, he looking at us, we like, you have water sign either. So she come before you should have beat her. So it could be good and it could be bad. It's just relying on the person who you have the account with. Then you have joint tender with right of survivorship. If one of the party passes away, the asset in the account passes by the rule of law outside of the probate to the surviving party. Tender in common. Tender in common allows for each joint holders of the account to design their own beneficiary for their portion of the asset in the event they passed away, instead of transferring by rule of law to the second account holder. So if I die and me and my son on my account, but I don't want him to get all the money, so I say, okay, he's on the account with me, but if I die, I want my younger son to get this amount, he can get this amount, my second son to get this amount. So you can do that as a beneficiary. You can split, or you could just split it in half, but you don't have to leave your portion to the second holder of the account. then the tenants in common designation allows the tenant to divide ownership of properties in any way they choose. Joint tenant option selects this mandatory 50-50 split of asset. So it's the same thing like if you have a mortgage and the house is in both names and one person passed with, if you have joint with right of survivorship, then it automatically goes to the other surviving person. And if you have children and you didn't stipulate anything in your will, or had that person who is on the mortgage with you sign out their rights to you, and say if something happened to me, I ask my husband, sign out your rights to my children. So if something happens to me, you cannot do anything with the house without them. I can sign out my rights to the children. So if something happened to you, to my husband, I can't do nothing without my children being involved. So we have to learn how to do it. I guess learn the laws, because a lot of persons don't know. And then even so, you have funds and trust for your children, and you say, okay, now I make me as a mother, I have young children. I say, okay, my husband, I make you beneficiary or trustee of their account. So if something happened to me, this is the money I set aside for them. My insurance money is to be set aside for them for college and to take care of them. But I pass, because you're the trustee, you have full access to the account. What do? The money that I left for the college funds, what do you do with it? You take it. And so my children never not able to go to college because you use the funds, So like I said, with everything, we have to be careful with what we do. Minors, also known as custodial accounts. A custodial account is a savings account accessible to a financial institution, mutual funds, company, or brokerage firm that an adult controls for a minor under the age of 18. Depending on the state laws, it can also be a retirement account handled to eligible employees by custodian. In a custodial account, approval from the custodian is mandatory for a minor to transact securities. In the UK, a minor is a person under the age of 18. Family Law Reform Act 1969. Before this act, the age was 21. Minors are not liable on many contracts made before they are 18. So there may be a legal complication if they have a bank account, because the main legal relationship between a bank and a customer is contractual, one as a debtor and one as a creditor. So we know if I let my little 13-year-old open an account, and the bank let them open an account, something happened, like they take the money and certain things happen, or money get posted to that account, and my little minor son go on and take the money because he say, oh, I see the money there, I thought it's mine. So what he did, he withdraw the money. So if banks allowed younger persons like minors to open an account on their own, they can't go to take them to court because they have to be a legal age 18. So that's the reason why a lot of banks don't open accounts for minors. Or if they do, it's where the parent is actually guaranteeing the account. Any questions, any concerns, anything to add? Everybody's so quiet. You're just making me feel that we back to where nobody participate, nobody's saying anything. Hello, Miss Roll, Miss Strawn, Mr. Roberts, Mr. Marshall, Mr. Ferguson, Miss Augustine. Can I get some feedback from you all, please?
Miss Smith, I'm not feeling well.
Okay.
That's why I'm just listening.
All right. Mr. Marshall?
Yes, ma'am.
Any feedback, any concerns? Anything you want to add to what I just went over?
Not necessarily. I think it was kind of straightforward, and you explained certain elements of what I probably may have talked about.
Okay. All
I
right.
have a question.
Mhm.
With the custodial account, it cannot be changed because it says,
After they get a certain
yeah,
age.
so it's an evolving account, basically.
Well,
And
yeah, when they get 18, I guess you could say, hey, I want my money on my account, knowing my business. I save it, I work it. Mother, can I take you off now? Yeah. But like I say, with anything, it's good to have a joint account because if something happened, like you said, your ailing mother and both, and she may not be able to get to the bank. So yeah, I always think you should, even though you don't want your parents know what money you got. You just say, oh, hey, your name there, but you only have access to my account if something happened to me. Okay, hey, sign there. You ain't know nothing where that bank is either until I choose to tell you. Because some parents, they go ahead and look at that account, they say, hey, put me on this. And so that's why you can stipulate it where you say, oh, she can't take nothing off my account unless me and her sign together. I can sign by myself. So you can put stuff in place so the next person can take funds off your account, but they can move it on the account. So like I said, as long as this is wide, so you have to choose whether the person is trustworthy enough that they won't take from you. Yeah. Because like I say, nowadays with the crisis that we're going through, things happen, people fall in need, and things happen. So you have to be the one to, know who you can trust. Yeah. Okay, can somebody take on Soul Trader for me? I think I'm ready now. I want somebody to read Soul Trader for me. Miss
I'll
Rowe?
read.
Who's Miss Roberts? Thank you.
Okay. A sole trader is a person who sets up and owns their own business. They may decide to employ other people, but they are the only owner. A sole trader has unlimited liability. As a sole trader, your business is owned entirely by you, grown by you, and ultimately succeeds or fails by you. This only means you are entitled to all profit that the business makes. Becoming a sole trader is simple. All you have to do is register your business name and you can start trading. There are huge incentives to becoming a sole trader, but with them comes terrifying or, depending on your personality, gratifying side effects. Some of the most famous entrepreneurs in the UK started out as sole traders, from Lord Sugar, who launched his first business with £100, selling aerials out of the back of a van, to Duncan Bannatyne, who started his entrepreneurial career with an ice cream van back in the 80s. Sole trader advantages. Many of the advantages are summed up under the heading control. You have full control over daily and strategic decision making. There's far less red tape and regulations than a limited company. You have no staff to manage or pay. Starting your business is quick and easy. All financial data is kept private. No accounts to prepare, as sole traders add income and expenses to their tax return. Full control. The advantages of being a sole trader are immense, not least because the owner has full control over the business for daily operations, as well as how large they wish to grow it. It's easy to set yourself up, as you only need to declare to yourself you are going to be a business. You're legally required to inform the Inland Revenue you are self-employed within 3 months of starting a business. Less red tape and regulation. A sole trader does not need, sorry.
No, I was going to ask, what is the cost of a business license here now? How difficult, anyone know how difficult it is to get it? How difficult it is to get a business license? How long does it take?
I don't think the process is so tedious, and then you have persons who complete it for you. If you don't know how to do it properly, you just pay them a fee.
Do you know the person selling on the side of the road has to get a business license,
Yes.
right? And do you know the different process they have to go through with these business license? I know I have a sister who sells newspaper, and sometimes she sells little drinks and snacks from in the back of her car. And she said the police came and they said, "Where's your business license?" She said, "What business license?" So they told her, say, "Oh, you have to get a business license." My sister told me she had to go to some training course and all of that. So it's not as easy as that. She said she had to go to some training course. She had to go to environmental. It was like so much different thing. I said, just to sell them newspaper and sell little drinks and snack and little potato chip from in the back of your car. Yes.
Yeah, probably they probably classifying it as food. So they probably might want to do a food handler's course.
Yeah, she had to do all of that.
Yeah,
Like,
because
what?
I guess even though it's packaged, it's still
Oh.
classified as food.
I was like, she said I had to go a whole day to do this course.
Remember the
I said, "Well,
Coconut Boys had to do the same?
I swear. Do you think they still enforce that now? Because I see them popping up all over the place. I see no sign because I thought they said they supposed to have their little sign, their little containers and stuff like that. I see none of that. So you think that fall away?
They probably
The
ain't as
Coconut
strict
Boys?
on it.
Huh?
They're probably not as strict as they were in the pandemic. Probably relaxed the restrictions.
But they say they had to have that. It was something during the pandemic. I couldn't even go to the pump to get water.
No.
I wonder what they did with all the funds they got from people. Did they give them back to their people? Or they
No.
really made those people pay those things? But oh, you get caught going to the, but sir, I ain't bad. What you mean that you catch me going to the pump? It was so ridiculous. I just couldn't believe it. You know, it was like, it was really, those were really rough times with that COVID. Really rough. Really rough. You can continue, Miss Roberts.
Less red tape and regulations. A sole trader does not need to complete many of the forms and accounting information that limited companies need to produce. Annual accounts help prepare your annual self-assessment tax return where you declare your annual profits and tax liability. No staffing management required. As there are no staff on hand, the owner also takes all of the profits made by the business and all financial information is kept private. Limited companies need to file full or abbreviated accounts each year at Companies House. You don't need to register a company at all and can trade as any name you desire so long as it doesn't infringe copyrights of others. Most people operating in this manner have businesses that have trading as after their company name. Fast decision-making. Decision-making is also fast as it's just the owner who decides where the business is heading and whether or not to undertake any work and where and when they will work. They are generally closer to their customers and offer a more personalized approach and improved customer service as they are the person each customer has contact with. Lower accounting costs. Accounts generally charge less for company accounts and advice because there's less work to undertake. You just need to complete a profit and loss account rather than a balance sheet and cash flow, although it's worth preparing these last two on a regular basis to manage your business. Sole trader disadvantages. The negative aspects of operating on your own are that everyone else perceives you as small, which in turn has other consequences. You have full personal ability for any debt. It may be difficult to bid and accept larger contracts. There are no staff to delegate to if you have an accident or fall ill. It's difficult to scale a business on your own. You can't leverage buying power due to your small size. You have to buy in knowledge and expertise if you don't have it yourself. Full financial liability if things go wrong. The main disadvantage is that you, as the owner of the business, are solely liable for any consequences of business failure or any other liability. For example, injuring a customer or damaging property, although public liability insurance can mitigate these potential issues. Others portray you as a small company. It may also be quite difficult to get larger jobs, not only because large corporations have many staff that can work on tenders and offers, But because most organizations won't work with a business that only has a staff of one, it can also be time consuming following up on tenders that ultimately don't come to fruition. The business stops if you are unable to work. You may also need to think about what would happen if you as a business owner were to become sick or had an accident so you couldn't work. Although critical illness insurance is available, sometimes it doesn't start to pay until after 1 month. It's also unlikely to be at the levels of profit the business is making, but it's certainly worth considering. Tax, VAT, and liability. Sole traders still need to properly account for all sales, expenses, and profits for any income tax and national insurance liabilities on a yearly basis. The VAT rules still apply if the turnover of the business exceeds the limit set by HMRC. What is HMRC?
What is that? I think that's something to do with the US. I'll find out what it is.
Okay. As mentioned above, a sole trading business has unlimited personal liability rather than the liability forming against the company and their directors. If the business can't pay its creditors, they may have to sell their personal assets to meet their demands, such as their house.
You see that? So, no, you can stop, Miss. Thank you, Robert. But you see, well, when they talk about the VAT business turnover exceeding the limit, well, we can look at that as saying Ministry of Finance, because as we know here in the Bahamas, I think it's a certain amount threshold that if your business is bringing this amount, you have to have your VAT certificate to show your VAT TIN up to say, well, okay, because you're making over 100,000, I believe, over 100,000. So here in the Bahamas, as long as you're making over $100,000, you have to get a VAT. You have to register and get a VAT TIN. So it's displayed in your business to show that, you know, everything that you sell should have that. Your receipt should have that on top of it. So at the end of every month, I'm not sure how they file it. If it's every month, they have to file in all what they actually spend. So receiving, so making sure that they ain't trying to crook the government by not paying what is due to the government. Any questions, any concerns, somebody want to add to what, or, you know, just give some insight to what Ms. Roberts just read? Looking at the advantages and the disadvantages, because as we know, being a sole trader, you have advantages where you don't got to give nobody none of the money. Everything belongs to you. You don't have no staff, so you don't have to worry about nobody calling in sick after you done pay them Friday and they calling in sick Monday and saying they can't come to work, and you just pay them, and you don't have nobody who you gotta say, okay, now I gotta go find somebody because this person going on maternity leave, and you know, so there's a lot of stuff that being a sole trader that you don't have to worry about. And like it says, there are some disadvantages too. And like with sole trader, you make your own decision, you have lower costs, and like when you have a limited company, as we know, you have to do financials. So you got to find an accountant to do your financial, file your financial, and file your taxes and all the rest. But like they say with a sole owner, it's just you don't have to worry about none of that. And you have disadvantages to it too, because like they say, you are totally liable on your own. And a lot of times people say, oh, you want to have this company? No, I can't trust you. I have this big contract. No, you use a sole owner. No, you don't have no workers, nobody to help you with this. No. So they turn around, they look for somebody else. So like I say, you have advantages as well as disadvantages because you don't have the staff. So what happens? Then suddenly so there are no staff to delegate to even. So even if you have an accident, you don't have nobody to go and fill in for you unless you have some children or your wife who know how to run the business. Other than that, because you're the sole owner, you have no staff, so you've trained nobody. So the business have to close because you don't have no staff. You can't leverage buying power due to your small size. You have to buy in knowledge and expertise if you don't have it yourself. So then you got to go outsource some stuff or get somebody to come in to help you because hey, this person gave me this contract, but they give it to me because they say they know me and they feel I could get the job done, but I can't do everything on my own. So what I need to do is I need you to help me with this little accounting work or this planning or something. So you still have to go out there and get some expertise or outsource something to someone else when you're just a sole trader. And you're fully liable if something goes wrong. So, and like I say, a lot of times, would you trust somebody who only one of them running a company to say you want them to do something that takes at least 5-6 person, a contract that takes at least 5-6 person to do, unless that person says to you, I have X, Y, Z, I have 5 persons that I know. These are the persons that I know I can outsource some stuff to them. Just like how people subcontract jobs to persons. They would say, I'm a contractor, but guess what? They subcontract. So they'll find somebody who they say I subcontract to start the footing of this building, putting in the steel and doing the footing of the building. Then they say, okay, now I find somebody who will be there to, pour the foundation of it or pour the floor. Then they find somebody else who could do the blocking up. They find a mason who will give him a contract to block up and and pour the columns for the bell course. Then now they say, okay, I got this guy, he good with roofs. So then they find somebody to put on the roof. Then they use that same person who put on the roof to put in the, but now, mind you, this their company. They own this company, but guess what? They're so smart, they outsource a lot of stuff to persons. And because they probably developed a reputation where they have good persons who give good quality work, who they outsource these jobs to, persons love their reputation, persons love their quality of work. So guess what? They continue to get jobs, and all they need to do is be able to outsource everything to people. They get all the person, they charge a person $500,000 for the house, but guess what? They outsource all of their work. So they have a contract with the mason, they have a contract with the roof, the carpenter, and so they have a contract with the electrician, with the plumber. But guess what? That company belongs to them alone. They're sole owner of that trading ads company. But they outsource, and what happens? They don't have it in their budget. Well, I outsource this. I know what the materials cost. I outsource this to that one. So they already put their profit in their pocket because they already know what they will come in at, because they don't have to share with anybody, and they've already contract this person for that amount, that person for that amount. But because the persons give them good quality of work, and persons are pleased with the kind of work they give them when the house is finished, that same one house that they built for, say, Mr. Ferguson, when persons come and see it, they say, oh, John Ferguson, his company do this. Mind you, he's trading as he's a sole owner, sole trader. But guess what? He's so smart that he outsource work to persons who give good quality of work. So he still win. And so, like I say, it's good as well as bad, but you can be a sole owner and still win it in the end if you outsource work to persons who give good quality of work. Miss Augustine, can you do partnership for me, please? If you didn't have a question, you have a question? Hello? Natasha? Everybody shut up. Miss Roll?
Hi.
Hi, can you continue for me with partnership, please?
Okay. A partnership is a legal form of business operation between two or more individuals who share management and profits. The federal government recognizes several types of partnership. The two most common are general and limited partnership. If your business will be owned and operated by several individuals, you'll want to take a look at structuring your business as a partnership. Partnerships come in two varieties: general partnership and limited partnership. In general partnerships, the partners manage the company and assume responsibility for the partnership's debt and other obligations. A limited partnership has both general and limited partners. The general partners own and operate the business and assume liability for the partnership, while the limited partners serve as investors only. They have no control over the company and are not subject to the same liabilities as the general partners. Unless you expect to have many passive investors, limited partnerships are generally not the best choice for a new business because of all the required filings and administrative complexities. Complexities, is it right? If you have two or more partners who want to be actively involved, a general partnership would be much easier to form. One of the major advantages of a partnership is the tax treatment it enjoys. A partnership doesn't pay tax on its income, but passes through any profit or losses to the individual partners. At tax time, the partnership must file a tax return from 1065 that reports its income and losses to the IRS. In addition, each partner reports his or her share of income on the loss on Schedule K1 of Form 1065. Personal liability. Oh, sorry.
I'm not sure if this happens here. I don't know how it works here in the Bahamas with partnerships, how it works here. I'd have to try to see if I could get some information on that for next class. Continue, Ms. Robert. Ms. Wool.
Personal liability is a major concern. If you use a general partnership to structure your business, like sole proprietors, general partners are personally liable for the partnership's obligations and debts. Each general partner can act on behalf of the partnership, take out loans, and make decisions that will affect and be binding on all partners if the partnership agreement permits. Keep in mind that partnerships are also more expensive to establish than sole proprietorships because they require more legal and accounting services. If you decide to organize your business as partnership, be sure you draft a partnership agreement that details how business decisions are made, how disputes are resolved, and how to handle a buyout. You'll be glad you have this agreement. If for some reason you run into difficulties with one of the partners or if someone wants out of the arrangement, the agreement should address the purpose of the business and the authority and responsibility of each partner. It's a good idea to consult an attorney experienced with small businesses for help in drafting the agreement. Here are some of the other issues you'll want the agreement to address. How will the ownership interests be shared? It's not necessary, for example, for two owners to equally share ownership and authority. However, if you decide to do it, make sure the proportion is stated clearly in the agreement. How will decisions be made? It's a good idea to establish voting rights in case a major disagreement arises. When just two partners own the business, 50-50, there's the possibility of a deadlock. To avoid this, some businesses provide in advance for a third partner, a trusted associate who may own only 1% of the business, but whose vote can break a tie. When one partner withdraws, how will the purchase price be determined? One possibility is to agree on a neutral third party, such as your banker or accountant, to find an appraiser to determine the price of the partnership interest. If a partner withdraws from the partnership, when will the money be paid? Depending on the partnership agreement, you can agree that the money be paid over 3, 5, or 10 years with interest. You don't want to be hit with the cash flow crisis if the entire price has to be paid on the spot on one lump sum.
Thanks, Ms. Roll. Thank you very much. Any questions from anyone regarding what Ms. Roll just read or anything you want to add to it, please? Anybody?
Yes, third party invest. Well, third parties are introducing the third person. Do we have any firms over here that broker deals at that
I don't think
become
so. At
mediaries?
least I don't know. I don't know. But like I say, with partner, okay, when one partnership withdraws, how will the purchase price be determined? One possibility is to agree on a neutral third party, such as your banker or accountant, to find an appraiser to determine the price of the partnership interest. Well, like I said, I guess we should have that here. If they have disagreement, I guess we would determining purchase price. I guess they should have a banker or an accountant or an appraiser. Yeah, but like I say, with partnership, it's like you have to really, I think it's kind of hard when you have partnership and if you have 50-50, because everybody has to take the liability, everybody gets the profit, and it has to be where both parties invested the same amount. I could not see me being in a partnership where I invested more, like I purchased this, I got this, but you came in on the tail end and you joined as a partner, but you still want me to give you full benefits, full rights to everything, making decisions and doing everything as me who bought most of the stuff into the company. You may say, well, oh, I bring 50,000 or I bring 250,000, but hey, you meet me, I start up, I had the machines, say it's like for a doctor, or I had the machines, I had this, I had that, I had the other. But like I say, with anything, especially when it comes to business, and I always tell people when it comes to business and money, there's no friendship in business, there's no friendship in money. It has to be totally a business arrangement. And so that's why you find that persons who have friends or say they were friends, I come to Mr. Ferguson, oh, lend me $50. Yeah, you lend me that $50. We've been friends for years, but guess what? At the end of the day, I loan you that $50. You duck me for every time I need to ask you for my money because you promised to give it to me at a certain time and you didn't. So the same thing, I think with partnership, you have to really be entrenched with that person and you really, like I say, have those documents really done up properly with a lawyer, because other than that, if you don't have your I's dotted and your T's crossed, you could find yourself in a lot of trouble at the end of the day. If there's a liability or if there comes to profit, whatever, you could find yourself in a bind if you don't have proper legal papers drawn up to distinguish how the partnership is going to run. Okay, now we have companies. Who's going to volunteer to read companies? I think I've done my reading for the day. Because I think a lot of people fell off. Miss Augustine, Natasha, I can't hear you. I don't see Mr. Marshall. Mr. Ferguson, do you want to read companies for me, please?
Okay. Companies are an association of persons formed for the purpose of some business or undertaking, which has legal personality separate from that of its members. The company may be formed by charter, by special act of parliament, or by registration under the Companies Act. The liability of members is usually, but not always, limited by the charter. Act of Parliament or memorandum of association A company may be a public limited company, PLC, or PLC, in which event its shares may be transferred freely among and owned by members of the public. All limited liability companies that are not public limited companies are private companies, denoted by the term LTD, limited. While companies are owned by their members, i.e. shareholders, they are managed by a board of directors. Historically, the duties owned by the board of fiduciary in nature. Historically, the duties owed by the board are fiduciary in nature and are owed to the company rather than the shareholders. Companies are a major instrument for economic and financial growth and development in the Western world. A limited company encourages trade to an extent that in the event of insolvency, the owners are liable only to the extent of their unpaid share capital. The limited company is a legal person in its own right and is sued in place for the owners or directors. A company may be limited by shares or, in the case of a private company, by guarantee. Since the Companies Act in 1980, it is no longer possible to create company limited by guarantee and having a share capital in the UK. A company limited by guarantee is a company that has the liability of its members limited by the memorandum of association to such an amount as the members may undertake to contribute to the assets of the company upon its being wound up. That's a long sentence. A company limited by shares is a company having a liability of its members limited by the memorandum of association to the amount, if any, unpaid on the shares respectively held by them. Company documents. Companies have 3 documents of concern to bankers. A certificate of incorporation is a legal document relating to the formation of the company or corporation. It is a license to form a corporation issued by the state government or in some jurisdictions by non-governmental entities or entity. Its precise meaning depends upon the legal system in which it is used. This is used by the Register of Companies and certificates and certifies that the company meets the requirements of the Companies Act. A memorandum of association which determines the company's relations with the rest of the world. The memorandum of association of a company is an important corporate document in certain jurisdictions. It is often simply referred to as the memorandum. In the UK, it has to be filled with the Register of Companies during the process of incorporating the company. It is a document that regulates the company's external affairs and the complements of the Articles of Association which cover the company's internal constitution. It contains the fundamental conditions under which the company is allowed to operate. Until recently, it had to include the objects clause, which let the shareholders and creditors and those dealing with the company know what its permitted range of operation. Although this was usually drafted very broadly, it also shows the company's initial capital. It is one of the documents required to incorporate a company in India, the United Kingdom, Ireland, Canada, Nigeria, Nepal, Bangladesh, Pakistan, Afghanistan, Sri Lanka, and Tanzania, and is also used in many of the common law jurisdictions of the Commonwealth. Articles of Association which regulates a company's internal operations, such as the borrowing powers of directors, voting procedures, etc. Each major Companies Act contains a specimen set of articles of association known as a tablet, which a company can adopt if it wishes.
Thank you. Okay, well, as we know, when you open a company account, there's so many different documentations that you have to have. And like I said, that you have to have, when you go to a bank to open, you have to have this memo of arts. You have to have your certificate of incorporation. These are things you have to have. If you articles of association, these are things that has to be done through legally. So you have to have these things done where your company was incorporated. So all these has to be done. And like I say, pay attention to them because you will see them in the exam. But like I say, it would be so great if we could just read at home so we don't have to be doing this because like it seems as if everybody is just dropped off. I can't reach Miss Augustine. Miss Augustine, are you on or you off the system? I see you there, but can't reach you.
Hi, sorry, I stepped away for a minute. Sorry about that.
Yeah, I wanted you to read. Can you pick up from where Mr. Ferguson left off? Can you read public and private companies for me, please?
Okay, no problem. Companies are divided into two main categories, public for the larger companies and private for the smaller. Public limited companies must have shares which are capable of being transferred without restriction. A share of capital for authorized amount of 50,000 or more, of which at least 50,000 must have been issued. Issued capital can be less than authorized. At least two shareholders. All other companies are private limited companies, limited or LTD. A private company is a firm held under private ownership. Private companies may issue stock and have shareholders, but their shares do not trade on public exchanges and are not issued through an initial public offering, IPO. As a result, private firms do not need to meet the Securities and Exchange Commission's SEC strict filing requirements for public companies. In general, the shares of these businesses are less liquid and their valuations are more difficult to determine. Trust accounts. An account in trust is a general term used to define any type of financial account that is opened by an individual and managed by a designated trustee for the benefit of a third party in accordance with agreed upon terms. For example, a parent can open a bank account for the benefit of the minor and stipulate rules as to when the minor can access the funds or assets in the account, as well as any income they generate. In most cases, the trustee who manages the funds and assets in the account acts as a fiduciary, meaning the trustee has a legal responsibility to manage the account prudently and manage assets in the best interest of the beneficiary. Typical trust relationships encountered are executors and administrators who manage the estates of a deceased person, trustees who are appointed under a will or trust deed to manage funds for the benefit of a third party, solicitors and other professionals who in the course of their business may hold funds belonging to clients for a particular purpose. Clubs and associations. Finally, club societies and unincorporated associations such as sport clubs or social clubs. These have no separate legal identity and their business affairs are conducted by the members in a general meeting or are delegated to an executive committee. A separate bank account for the club's association is strongly advisable in order to avoid a treasurer or secretary mixing their own money with that of the club or association. If the account is termed Thomas account, Orchard Road School PTA, then Mr. Thomas will be personally liable for any overdraft and the bank is given notice of a trust. The bank's standard mandate for such clubs and associations should be used, appointing the bank as bankers and authorizing the chairman, secretary, and treasurer for the time being to sign checks. As committee members change, new signatures should be obtained. Lending is possible to a club against third-party security. Example, charges by members over their own property. The debt of a signatory does not affect the operation of the account, although for practical reasons, he or she should be replaced. Some large clubs, example sports clubs, may be companies limited by guarantee.
Thanks, Ms. Augustine. Okay, so I think they're straightforward. We're finished chapter 6, so now I'm going to say to you, please, I'm not going to repeat this again. Y'all please read, man, because I just okay, now we're talking about competition in retail banking. We know around the world we have competition. That's why we have a lot of mergers of banks and companies like that. So we know right here in the Bahamas, we have competition with banks because we compete for persons getting cards, we compete for loans, we compete for a whole lot of stuff. So I really want y'all to go through the different case studies that I have here. So I need y'all to go through and make sure when y'all come back on Monday that we don't do this reading and y'all I'm gonna call individual with different areas. Like when I talk about the introduction, I'm gonna have somebody say to me in their own words, or even if they summarize what that's all about, competition and concentration. I'm needing somebody to talk about the OECD, talking about the economic cooperation development found in the market. I need somebody to talk about the competition and concentration, the two examples, legal. I'm going to need somebody to be, to just talk about these different case studies, the scope of competition, retail strategy, because we're going to finish chapter 7 on Monday. So please read for me so we can just get through this chapter. So the more we complete quickly, we're able to focus more time, like I say, on your studies, because like I say, I can't see nobody coming out of this class with less than a B. So I really want y'all to focus. And like I say, when I'm finished marking, I will see whether, according to how the results are on a scale from 1 to it's 12 of y'all. I want to see how the results are. And according to what the results are, I will see if I need to retest you on chapter 1 to 5, or we're good going through from chapter 6 to I think it's 11 or 12, because like I say in the back talks about COVID. So I want to see, once I finish marking, I'll be able to determine whether I'm going to give you your final exam from chapter 6 to chapter 12, or I'm going to give it to you from chapter 1 to chapter 12, because I felt you didn't do enough work or paid enough attention or know the material as you should from chapter 1 to chapter 5. So I am giving you your final exam from chapter 1 to chapter 12. So the midterm will determine whether I give you chapter 1 to chapter 12 or chapter 6 to chapter 12. Okay? So I say good night to you, and I pray that you all have the opportunity to really go over chapter 7. So we don't have to I don't have to read, y'all don't have to read. We can just take points from different areas and talk about it. And because like I say, we're going to finish chapter 7 next week, Monday. But I will have all your results to y'all by Wednesday, Thursday, the latest. I will scan everybody's result with assignments or quiz that I still, because I know there's some persons that I still had their quiz because I just got them from this. So I will, once I'm completed all of those, they'll be sent to you by Thursday, the latest. I'll have them to you. Okay? But are we understood that I really appreciate if y'all would read? All right. Good night.
Good night.
Good night.
Good night.
Good night.